Alrighty, welcome back to Heterodox Vigor. I'm Benjamin. Hopefully, some number of you are here because you saw my comments on Facebook and wanted to get a taste of that. Because really, anyone that knows me well knows that this is a topic I could probably speak for dozens of hours on, definitely more than an 8 hour session in one sitting. So we're really going to have to cut this short to specifically what I ended up with the title: Inflation, Tariffs, and the Differences That Matter. We don't have time to go over inflation in a big way. We're going to lean more heavily on tariffs since it's a more, that's the context that we care about: inflation, tariffs, right? And again, what the differences are, and kind of my frustrations with people trying to erase those differences and conflate one with the other. So, to get right into it, what's a tariff? A tariff is going to be an extra tax that is applied at the point of import to the country on goods that are made at least a certain percentage in some foreign nation. And depending on the way that they're written, you can have an across the board tariff like, oh, 20% on everything, or targeted tariffs to a certain country, like anything from China is 100%, or maybe even I don't know, to make up something weird, we're gonna say that Australia is dumping too many of something that we get in Australia on our industries at literally below production value, and it's putting our producers out of businesses. Therefore, on this one particular, we're not going to ban imports, but what we are going to do is we're going to put a 200% tariff on it. Okay, so these are all possibilities on what a tariff might be. Now, what do tariffs and inflation have in common? Well, they're going to raise the price of the product or any services that depend on the product to be rendered by some additional percent. So that's compared, that's why people are like, oh, price go up, inflation, price go up, tariff, but it is not the same thing. It's for very different reasons. A big focus that I want to make sure that people understand, that the mainstream media has just been absolutely malicious about ignoring and distracting from, which is that when you hear these percentages on tariffs, they are talking about at the point of entry to the USA, which means that, if you're talking about a retail item, something that's going to be sold on the shelf at Target, it would be really hard for Target to make money if they were selling shirts that they paid $5 for $10. That would actually be really rough on them. A lot of the time, their cost basis is a lot closer to like a tenth to the fifth. Now, true, you have additional cost built into it because Target has to distribute and warehouse and shelve. You have to have this stuff, you have to have it stored somewhere, you have to take care of it, you have to pay employees to manage it, you have all the things, right? So all of those costs come after the tariff. So those sorts of costs that Target is running their business and then using the money that they're getting from those business activities to pay the people that are doing it, and to pay their rents, and to pay the electric company to keep the power on, all of that is coming after the tariffs. So in a lot of these cases, 100% tariff is only going to raise the retail price of something by, you know 20% in many cases. If you just, and again, if that's like, oh, that's really convenient, Benjamin, well, that really works for your narrative. Okay. Well, let's not assume it then. Let's think about it carefully though, because I agree. It is convenient to politically for those who are more open to the idea of tariffs that tariffs are going to be a smaller increase in what people are paying at the register, right? That would be a point against the people who are saying tariffs are too expensive for us. They're going to raise our cost of living too much. Okay? So, again, why why do we expect that it's going to be under 50%? Well, because again, if most businesses can barely get away with buying something for $5 and selling it for 10, especially when you're talking about they're literally buying it at like the point of import or something. If you buy it before it's imported, you're paying the tariff. But that means you get those cheaper prices, pre-tariff prices, and then you pay the tariff when you import it. On the other hand, if you're buying it from someone who already imported it, then again, they're paying the tariff and they're just going to bake the price of the tariff into the price. But again, what is that price? It is going to be a wholesale price. And depending on whether if that item's still in China, that's going to be dirt cheap. If someone has paid to transport that item from China to the United States, well, sure. Like at that point again, is it going to cost a little bit more? Yeah, but it's already got the tariff. So literally you're talking about the difference in pricing of trying to figure out strategically as a company how much of the risk of transporting it from China to the US you want to do, in order to figure out who's paying the tariff in the narrow sense. But at the end of the day, the only reason that matters is it this price or the slightly different price? Is it still in China? Is it right off the boat here in the US? That's like the only difference. And whatever also, and again, small differences like, oh, in perhaps in when you have to pay it, and depending on what the market looks like, I mean, these things might have effects. They're not going to be consistent unless there's a major event that pushes it all in one direction. For example, you could actually end up paying your tariffs a lot later if you did buy your goods in China, you're importing them, and then there's some sort of a dock workers strike, and you can't get your stuff unloaded. Well, then yeah, you might end up paying like a month later, and that could have and you and everybody else whose stuff is stuck on boats in that port or whatever, right? Okay, so you see, we can have aligned effects and we can have non-aligned effects. And when we have aligned effects, they're usually coming from something that if we're paying attention, we can kind of observe and we can say, hey, look, that looks like it's doing this in the same direction to all of them. That makes sense because we know that that would tend to do that. And we see that's what's happening, not surprised. Just honestly, like farmer level behavior. We're watching the normal economy do normal economy things the way that the economy economies. Okay? Okay, so why tariffs? Let's go there. Why tariffs? Uh, let's start here. Tariffs are a net cost in the sense they're destructive in the broken window fallacy sense, right? Great book, Economics in One Lesson by Henry Hazlitt. Um, just go. It starts with the story of broken window, and again, to grind that up real fast, the idea is if some hooligan throws a rock and breaks the window at the bakery, then the baker then has to buy a new window, and that stimulates the economy, right? Well, except that what you show logically is that at the end of the day, you're still down the window. Like the thing that was destroyed that prompted the chain of economic activity to replace it was still lost. So even if you got everybody to move, you did actually end up being kind of wasteful in the process, unless you really find a way to redirect someone's behavior, and that's going to be that's the tricky part here, right? So first of all, why is it broken window territory? Because if if we raise, again, just the lazy example is China 100% tariff on something that wholesales for about 20% of resale, right? Then so at point of import, it's got a $100 item, would have a $20 price tag on it. Like $100 retail only has a $20 wholesale cost at this point. Okay? And then 100% tariff, that's going to be a whole 20 bucks increased price. Okay? Okay. That means instead of 100, you're paying 120 by the time that you're paying at the register. So your price went up by 20%. Okay? It didn't inflate. There's no inflation. There was no new money added to this situation, right? There was no, it's a tax. There's nothing additional was produced here. It's a tax. So what it is to engage in your voluntary trading behaviors of, I have dollars, I have Chinese produced goods, we want to trade. Instead of that happening frictionless, you're adding a friction of a tax, of a net zero loss of, you guys can only do this if the person actually values it at 120 instead of 100. Even though, even though we know that the seller has to value it. So what it's doing is it's doing that, it's adding a gap, right? So people will argue all day in the same way that the Marxists will argue that um, all capital gains come from labor, and you'll get a lot of capitalists saying, no, actually, a lot of labor gains result from the investments of capital. So there's an ongoing debate about what percentage comes from what percentage, when it's obviously not 100% either way. Same thing here. Big debate over, is it less profitable to sell goods that you have to pay tariffs on? Or is it that customers are paying more for the same thing? Well, obviously, there's going to be a mix of the two, because it doesn't matter. I mean, the retailers always want to sell their products for more or less what the market can bear. They might be specialists who aim at a low price, but that low price is what they think they can take in market share, compared to choosing reduced profits in order to get per unit in order to get that market share, right? You might get more profits overall doing more units at a lower price. That's really hard. If you've ever done that experiment, go sell. In high school, we sold donuts at breakfast or whatever, and we did. There were all sorts of confounds because of how we did the pricing, but we had different pricing every day, and there were really clear patterns where there might not have been hard patterns in who was buying and when. The thing that held true was that, just, straight across the graph, the higher the price we sold them at, the more profit we made, even when we sold fewer of them. Right? So so obviously there's all sorts of lessons. We're not going to dive into the lessons of, wait, what should the price have been in that context? But the point being, in general, if you can get away with selling units for more, you're going to do that anyway. So the argument is that a tariff steals your ability to lower the prices by the amount of the tariff. And I agree. So, but the flip side is, in the market, right? They say the consumers are going to pay it because the consumers have to pay all of the whole stack of everything. right? If it's $120, you expect $120 from the consumer at the price point, right? So on that level, it's easy to make the argument the consumer, in fact, you can rationalize it away in your head. The consumer goes through the motions of nominally paying the entire amount, including the tariff. So regardless of how you want to assign the net loss, there's clearly a net loss involved, okay? Because there's transactions that aren't going on, which means that there are people that might not have orders for their factories. Their factories might cut their hours, they might shut them down. And remember that this happened to our factories a few decades ago when we let China kind of take over in the first place. The fact that we didn't have tariffs meant that, to the extent that China could undercut our production, then we had to make less of it here because customers wanted to buy more made in China stuff, right? That's what the issue was. So the way that tariffs would theoretically change that is that all of the sudden, if it was not profitable in the US to sell that item retail for 120, but it can be profitably sold retail or excuse me, for 100. It couldn't for 100, but it could for 120, right? Or yeah, well, you know what I'm saying. Customers might not be willing to pay 120 when they can buy it for 100. So if you can make it in the US profitably and sell it at the 120 price point, but you cannot at the 100 price point. Right now you don't have a factory because China is making the things that your factory would make, right? You don't own a factory because you don't need one. However, all of a sudden, if we have those 100% tariffs and 120 and $120 is available to bid for the item that you used to only be able to pull up 100 for. Oh, interesting, because you're not paying the tariff because you're building your stuff in the United States. So you now have a $20 price head start on your Chinese competition. That's what a tariff does. So again, it's a net loss of hurting consumers and retailers, not all of them. Only the ones that choose to buy products that had sources that tariffs apply to. So it's choice to inflict this harm on themselves by pursuing foreign produced goods. And you can say, Benjamin, that's so oppressive. How dare you not let them uh, pursue foreign produced goods? China kind of has a slave labor situation, and although I can see arguments for the surveillance state and for social credit scores, not the way that the CCP is doing them. They're led by rotten leftist ideas, and frankly, uh, what their leadership is doing is very uncreative, and it really is not anything that anyone on the left or the right should really be excited about. That's my opinion there. And the point is that President Trump has been really clear for all of the reasons that he's had why he would like those tariffs in place. Um, and again, like essentially, it is to let goods that are just going to take that extra $20 to be made in the U.S., especially because why? Because we want wages in the US to go up. We want more. Right now, wages are not keeping up with housing costs. If that trend continues, either you're going to get an increasing ownership of housing, not by the people living in it, Or which again, that usually means that the prices are going to keep going in the wrong direction compared to labor for reasons of supply and demand and incentives and all that. Or at some point or another, you know, here's the thing: if housing prices crash to where actual wages are right now, then that crushes the middle class. We don't want that for all sorts of reasons, right? So, what it comes down to is, in order to preserve the middle class, and preserve our, and frankly rebuild our national independence, that we want to rebuild a bunch of stuff in the US, we're going to have to protect against the foreign competitors, because the reason why we don't have the US version of the rare earth mineral mines, or the some of these just random consumer factories, was exactly because there just weren't tariffs. And some stuff that is so cheap to produce that it's actually all about transportation costs, we already are making in the US. Like, a lot of the cheap plastic crap that I buy at Walmart, actually, when you look, made in the USA. you know um it's possible. We have all sorts of factories in the US, and we could have more. And part of that, and again, to the extent that they're saying they're having trouble finding workers, it's a culture issue. I've dealt with a couple of factories that, whether they hired me or not, they made it really clear that just they basically had a culture of making things difficult to keep out people that didn't put up with difficult situations, because they were hard-nosed old timers, and that's basically where that was coming from. So there's definitely some cultural improvement that could happen there. But what's also likely to happen, of course, is automation. And that's the other thing, with universal basic income being talked about, is as more people are replaced by automation. um you know Tariffs are a good way to try to keep more of those dollars within our borders, instead of sending them somewhere else where they can make trouble for us, right? And that's the thing is, I say where they can make trouble for us, there's a limit to the trouble that they can make. And right now, the rest of the world really does need US dollars, basically as reserves, instead of gold, because there's not enough gold in the system to back the system. It's down to the US dollar. And just to remind everybody, again, how does inflation is going to happen when, because we're making too many US dollars, there are then too many US dollars chasing the same goods and services. Okay? So, in the case of the tariffs, we're not adding additional dollars to the system. In fact, part of what we're actually doing is, by making it less attractive to export goods to us, then that means that we are trying to also give them fewer dollars, right? Which means that they will then have less ability to bid up the price of other things that we wish to purchase worldwide. And and that's the thing, is that we're next net importers, and we have to be. Why do we have to be? That's the part that people don't seem to understand. On the balance of trade, as long as the US dollar is, and US treasuries, the interest paying version of the US dollar, are the world reserve currency, we have the same kind of savers problem that we have on the US level. And I don't want to trigger anyone, but MMT, modern monetary theory, one of the insights that they had, and again, it shouldn't be unique to them. This is something they've called out. Everyone should be paying attention. The math of it is that, for instance, in the US, if everyone in the US, like normally, in order to keep the money supply balanced, to not change, same quantity of money, okay? Friedmanites, same quantity of money. In order to do that, that would mean that for every time that someone wanted to save, right? That what? That's money that someone else didn't get as income because they could spend it or save it. So when they save, it would lower the velocity of money. Okay? But more to the point, again, what if you have an obligation? What if you have an obligation? So and what if that obligation is interest, involved? Well, then all of a sudden you have a force on the system. You have a fixed number of dollars in the system, but the amount that people think that they own because it's owed to them. Oh, yeah. So you can say, so there's still a balance. There's still a balance, but the thing is that while it's set up there, even without fractional reserve banking, which gets crazy because that's the real kicker here, is that that's how new money actually enters our system, is that it's lent into existence. So you actually have this balance of sorts because every time that you create a dollar of asset, that asset is someone else's liability. And at the end of the day, it all ties back to legal tender laws and the ability for the federal government to mandate, hey, we're not going to enforce your contracts unless they're denominated in US dollars, and then you're going to pay taxes according to the law. Crazy, crazy. So the point is, if someone wants to save, then it on balance, what's happening? Government's taking a bunch of dollars, government's putting out a bunch of dollars. So if they balanced that, if you actually had a balanced budget, what you know what happens is, again, there's deflationary effects over time as people try to save, right? There's just fewer and fewer dollars in existence, and the richer that people got, the less money would circulate. Wouldn't that be weird? And then, uh, what one of the things that's going to tend to do, is if nobody wants to spend those dollars aren't chasing goods or services. So prices are going to fall. And if prices are falling, besides like crushing a bunch of people who have debt, you're also going to have the issue that just like your labor is going to be worth less per hour. So this deflationary crunch, because even if you could produce something, no one has the dollars to pay for it. Huh. Yeah, no, that would be kind of messy, you'd think. And that's part of why every year the surplus, I mean, at minimal, we need us to run a surplus the size of interest on the national debt, or else we're taking out more from the economy, dollars wise, than we're putting back into it. That's going to be deflationary. That's going to crush domestic wages. That's going to crush domestic housing values, right? And it's only going to help people who are already filthy rich, and it's only going to help them relatively. They would lose too. They would just end off better than other people in relative terms. So the point is, we do not want massive deflation. We don't want any deflation. Like, we really don't. The economy is set up for still is set up essentially for the interest rate has to be at or below the rate of wage growth, aka inflation in the context that the Federal Reserve cares about. Because at the end of the day, that's when they say that they're raising rates to fight inflation. What they really mean is that they're raising rates to make businesses fail, to cause unemployment, to cool off the labor market, that to try to scale it back a bit. That way wages don't get out of control compared to returns on to capital. That's not in the interest of the lower and middle classes. That's malicious. And that's why Trump is, trying to improve things, but he doesn't have a deep understanding. He just sees the people getting crushed. And he sees the manufacturing going overseas. Those issues aren't complicated. As complicated. He sees that. I don't know if he's going to choose great fed people. I do know that he's been job owning the current bunch that they need to lower rates, because the longer that they leave rates higher, the worse the housing shortages are going to get. Nobody wants to pay these outrageous percentage rates. It over the course of a mortgage, it raises the cost of your house so much to pay a higher interest rate. It it's it's malicious. We should not be encouraging people to take on over $100,000 of debt at interest rates over 7%. That's that is definitely like talking them into debt slavery. And it's really screwed up when people do that with student loans to young students. But and that's a separate conversation, but it's the same kind of screwed up as when we're talking people into buying these houses at record high market valuations, in some cases, um at high percentage interest rates. People who know better are buying in cash, or they're not buying right now. They're not taking the bad mortgage deals. And if we somehow succeeded in getting even more people to do the smart thing and to not take those deals, like, the situation would get even uglier. We have adverse incentives set up where people doing the individual right thing for themselves are setting terrible adverse incentives for others, right? Okay. So, inflation, again, to stay at no inflation, at minimal, we need a government surplus in, money printing, borrowing. It doesn't even have to be borrowed for our reasons. The issue of treasury bills being a world reserve asset means that the rest of the world needs us to keep doing treasury bills and paying interest on the debts. And that makes sense that we don't care, because we're the ones working to support the interest on the debt, while they're the ones that are depending on the value that comes from our willingness to work for dollars. Because at the end of the day, that's what props up the dollar, is that not just the work of Americans willing to work for US dollars, but for foreigners who are willing to work for US dollars in their own country, and for the companies that are willing to take contracts in US dollars, even if they're paying their local workers in local currency, right? Because all of this is creating demand for the dollar, which is what supports its value. So it's, again, it is unlikely that if we engage in behavior that makes it harder for us to buy foreign goods, like, that's going to have a slight deflationary effect, in the sense that we'll have fewer foreigners trying to use dollars that they acquired theoretically to buy our products, right? So it might hurt our exports slightly, but it would help our imports, or not our imports, excuse me. It would help our domestic stuff, because if people aren't buying imports, then they're buying domestic instead. There will be at some inflation. And what do I mean by that? What I mean by that is that, to the extent that, again, the tariff goods aren't experiencing inflation, right? The inflationary effects come from the domestic goods being allowed to rise in price because there are no longer cheaper foreign competitors, which results in a mix of it being more profitable to invest and own US firms, or firms that employ US domestic workers, right? And or to be a domestic worker. It's going to pressure your wages up. There's going to be more demand for people like you because someone can make money off of you when they couldn't previously. Okay? So because you have these pressures that are going to pressure prices upwards, the result should be that US wages are rising more, especially because, well, especially to the extent that the tariffs are actually successful at diverting those dollar flows from investing in Chinese factories and Chinese workers and tariffs now to investing in US factories and US workers and dodge the tariffs. So I hope I'm sorry it really did take half an hour to hash this out down to the detail, but I'm hoping that you now understand where I'm coming from here on why that matters. Yes, there will be some price increases in US domestic goods. They will definitely not be 100%. We'll start there. They won't even, to the extent that it's the amount of the tariffs or even slightly more. And that's the thing. People will say, oh, the inflation will spiral because workers' wages will just keep having upward pressure. And you're upset about people working having market pressure to where, because they're worth more to the market, because they can pull more dollars for their employer, they want a bigger cut of that. That makes all the sense in the world, guys. Like the whole thing about, oh, inflation, we have high costs right now. We have to cut labor. You guys are idiots. If you have high costs, your laborers have high costs. If cost of living is going up and you are not giving your workers a raise that's similar to the cost of living increase, you're cutting their wages. That's like begging them to go work for someone else, which is really weird unless they're a bad employee, because a good employee takes, time and effort to get where you want them to be, to know your business, to do your business the right way. Even if you can immediately replace that employee with someone of a similar skill level, for the lower price that you're offering, inflation adjusted, it's not worth it. Even in just retail type industries, they tend to go, spend upwards of $10,000 all told on the paperwork and processes for every new hire, like and training and onboarding and all that. So it's crazy. So the point is, we are trying to, I say we, the people who support the idea of threatening China with tariffs unless they play by certain rules that they will not agree to. We're okay with them not agreeing to it, but I do think the demands should be out clear on the table on Trump's side, that hey, because of these issues, unless you're willing to address them, which we don't think you're going to, this is our policy until these things change. That's appropriate. That's what I'm saying. And the mainstream media is just absolutely being deceptive about the consequences of that, and about why he's doing it, and about how it'll affect people. And no, at the end of the day, there if you're anyone on the lower end of the income scale, what you have to understand is that Chinese goods and a lot of other imported goods have a lower labor cost to them, meaning that you're losing the competition for the job to make this thing to someone who lives in a different country where cost of living is a lot lower and they don't have to ask for as much money. Okay? So if you're super cool with with competing with the $2, $5 an hour folk, um and you don't think that there needs to be any barrier there whatsoever, that usually tells me that you do something a little bit more unique and special than most Americans do. And I would say, please consider the position of the people who are not watching this video and never are. And you might say, hey, that's not my problem. They're not my problem. Okay, but if your neighbors are accusing each other of eating their pets, that's not a safe situation for you. You know what I mean? I think that you need to think rationally, that maybe maintaining and improving your environment to the best of your ability, to the extent that what it costs you is less than your benefit, like put some thought into that. Like it's worth the thought. Like if nothing else, you'll feel better because you're already doing everything you should be doing, right? Okay. I really appreciate you guys taking the time. Um, I mean, honestly, with where I'm at right now, I'm happy to make the time. It is a make the time issue. So basically, when you guys want to hear from me on issues, make it clear that, like, hey, if you made a video, I would sit and watch this, or I would sit and listen, whatever. I would listen to this while I'm driving down the road back and forth to work, whatever it is. Like, yeah, feel free to directly message me, say hi, have a conversation, ask questions. And again, if you want a video, be explicit, say, hey, give me a video on this, I'll watch it. Until then, I mean, that's why I made this video. Someone very specifically did say, yeah, I'd watch that video. So until that happens again, you probably won't see a whole lot of uploads, because I'm actually making really profitable use of my spare time when I'm not enjoying my relaxation. So again, thanks again for listening. Take care, guys. Bye bye.